Hello and welcome to Charting the Markets on Friday, the 30th of June 2023, the end of the month and the end of the quarter. So we may see quite a lot of volatility today in several asset classes. Let's begin by having a look at the data, though. In Germany, we had German CPI inflation out at 6.4%, and that came in higher than expected from a 14-month low of 6.1% in May, and was then followed earlier this morning by German import prices dropping actually to lows last seen 13 years ago. So we have a mixed picture there between import prices and the CPI inflation in Germany. But when you look at other countries such as France, for example, French inflation cooled to a 15-month low, and Eurozone inflation came in at a 17-month low, with inflation in the Eurozone dropping to 5.5% in June of this year, down from 6.1% in May. The problem is that basically core inflation remains stubbornly high. Core inflation, which is excluding food and energy prices, basically rose to 5.4%, more than expected, and is still very close to the recent highs we saw at 5.7%, meaning that the European Central Bank will be forced to continue to hike its rates in order to bring the inflation rate down to its target around 2%. But despite of that, European markets have really rallied this morning, and that kind of also on the back of better data coming out from the US. Yesterday evening, we saw that US GDP came in much better than expected at plus 2% for the first quarter of this year, compared to the year before, and that was better than an expected 1.4% rise. And when you compare that to UK GDP, that data got confirmed earlier this morning at plus 0.1%. So just skirting a recession in the UK. We're very, very marginally above the 0% here, whereas in the US we can see a lot of growth with plus 2%, surprising analysts. And that has led to basically US markets last night rallying, and on the back of that we had Asian markets also rallying, closing the month on highs, and that was also on hopes of a stimulus being seen in China after data earlier this morning for June showed weaker than expected growth in services and a contraction in activity in the manufacturing sector. And basically on that positive note, the FTSE 100, when we have a look at the daily financial beta, you can see here also rose, and the FTSE, unfortunately for investors in the UK, is actually the great underperformer this year with regards to its European peers. And recent events haven't helped. I mean, you've had earlier this morning, for example, the nationwide house price index falling to 3.5% in June, and that was further down than the 3.4% we saw in May. And also yesterday, news out that the UK utilities companies, Thames Water, does have financial difficulties and may have to be saved by the government and nationalized. So all of that has led to the FTSE 100 underperforming, but still this morning it seems to be jumping on the bandwagon and following other European markets higher. And what we can see here is that we've risen above Wednesday's high, and we seem to be heading towards the early June low at 7,546, and also the red line here, the 200-day simple moving average at 7,561. So short-term upside to be seen, but in a medium-term downtrend. As you can clearly see here, we have a series of lower highs and lower lows, all of which is actually negative still from a technical perspective. And we may well next week fail around the 200-day simple moving average, or if we were to break above it, we could then fail along this April to June downtrend line, which currently comes in around the 7,600 mark. So basically, yes, short term we seem to be bottoming out, but medium term, unless we take out the highs seen in mid-June at 7,688, the medium term trend remains bearish. When you look at German markets, what we can see here also is an acceleration to the upside taking shape right now. But here we actually made a new all-time high in mid-June, just marginally above the high seen in May, but that wasn't confirmed by the relative strength index, which made a lower high, and that was basically pointing to negative divergence on this chart and led to, or was a precursor or a warning sign of the sell-off we've seen since. And it was interesting because we basically saw 6 days of consecutive negative closes for the DAX 40, but then on that more positive data coming out of the US, better consumer confidence data, better GDP data, all of that, US markets rallied again into the month end. And we have now another month of positive closes for European equity markets and also another quarter of positive closes here in Europe as well. And the story is quite similar with regards to the US. And we'll have to see whether in Europe, at least, we will be able to overcome these recent highs and make new all-time highs, for example, for the DAX here, or whether we might actually top out in this region below the recent all-time highs and perhaps retest these key support levels we've seen back in May and June actually back in May of this year between 15,659 and 25, because a fall through there would mean that we are forming a top. But right now, short term, further upside is once again in store. When we look at the US, the story is, as I say, quite similar here. We are now on track for a fourth day of gains with regards to the S&P 500. And we'll have to see whether next week, after the positive quarter we've seen this quarter and the positive month, we can sustain this upward trend. If we were to take out the 4,447 high seen in June on this daily financial bet, then we could be heading up again towards levels last traded in April of 2022 at 4,513. So that would be the next upside target. On the weekly chart, it does look still quite bullish for the S&P 500. On the daily short term as well, for this picture to change, we would have to fall through the 4,328 low, the late June low, in which case we could then retest the uptrend line. But short term, into month end, into quarter end, things do look positive for equities today. The US dollar has also recuperated its losses over the last few days and has actually appreciated quite well on the positive data we've seen during the week out of the US, showing us that the US economy is still on a strong footing. I mean, we had GDP data coming out much stronger than expected at plus 2% for the first quarter of this year compared to an expected 1.4%. And we can see on the inverse here on the euro-dollar chart that the European economy is not doing as well as the US. And you can see here with the dollar appreciating, the euro is actually coming off. And we can see here that we are currently retesting last week's low at 108.45 on euro-dollar. And failure there could take us back down again towards the early June high at 107.80. That would be our next downside target. And we'll have to see whether we can hold there, in which case this could just be an ABC Elliott wave correction in an uptrend that we've seen since the beginning of June, which could then take us back up again towards the 110, 111 area, or whether if we were to fall through 107.90, we could then actually top out. That could mean we have formed a top here and we could be heading back down again towards not just the March to June uptrend line, but also perhaps back towards the May lows and also the 200-day simple moving average between 106.36 and 105.92. So interesting times ahead for euro-dollar. We'll have to see how we close this week with regards to this 108.45 low. A weekly close below there would indicate that further downside is likely to be seen. If we were to stay above 108.45, it's possible I can sort of hold here. But for the bulls to really be back in control, we would need to take out basically the June high 110.12. And right now, short term, that doesn't look very likely. The story is quite similar with regards to the British pound against the US dollar. Here also, US dollar strength has led to a sell-off in the pound sterling against the US dollar, taking us back down to 125.91, a two-week low, above which we're holding today. Despite the data out of the UK not being that positive. And ahead of this afternoon's US PCE inflation data coming out 1:30 p.m. And that's the Fed's preferred inflation measure. And it's going to be important to look at that because it will give us an indication of whether we are likely to see these two additional rate hikes we are currently expecting the Fed to provide us with, or whether things might actually change. And the PCE price index, we expect for May prices to rise to 4.1% year on year compared to 4.4% previously, and also to rise by 0.5% month on month compared to 0.2% back in April. So the British pound for the time being seems to be holding. We'll have to see what the US dollar does later on with regards to this inflation data coming out of the US at 1:30 p.m. If we were to fall, though, through 125.91 on cable here, we would then be heading back down again towards the early June high at 125.44. And also here you can see the uptrend line going back to March of this year, and the orange line, the 55-day simple moving average at 125.37. So that's pretty good support here. I don't think we will fall through that area today. Now, if the US dollar wasn't going to or isn't going to appreciate on that US PCE inflation data, then perhaps the British pound could regain some of its losses that it's had over the last couple of weeks and retest the May high and also the last week's low between 126.79 and 87. So these are possible short-term upside targets for today, the end of the month for cable. Moving on to the Japanese yen, and the yen continues to depreciate very strongly. Yes, the upside momentum is slowing down, but that's not surprising because there is now this looming threat of the Bank of Japan perhaps intervening, as it has done successfully in the past around these levels. So right now we are sort of gradually advancing, and maybe some people will take some money off the table ahead of the weekend when perhaps we could see some intervention. We don't know. But the Bank of Japan is certainly saying that it has its eyes peeled on the exchange rate, on the yen, and doesn't want to have a weaker yen going forward. So investors could be quite nervous around this, but it doesn't reflect so far in the chart. As you can see here, we've got very little volatility at the moment. And we're trading, if we go back on a weekly chart, back at levels seen in of November of 2022. And the upside target we had was the late October low at 145.11, which we've now hit. And if we were to take that out and continue to rise next week, for example, then the September 2022 high at 145.90 would be our next upside target for this currency pair. But as I said, be wary, be careful, because the Bank of Japan is likely at some stage, if this advance in dollar yen continues, it might intervene and try to push the currency pair back down again and basically alleviate the recent yen weakness. Commodity markets have been interesting of late, and we expect the price of crude oil to close in positive territory for this month. And we can see that on WTI. Here we have been trading in the sideways trading range since May, and are once again bouncing off this $67-ish area. As you can see here, we are now on track for our third consecutive day of gains on basically tightening global supply, which is outweighing demand concerns. And with the positive data out of the US, with regards to the GDP data coming in at plus 2% for the first quarter of this year, much higher than the 1.4% we expected to see, that's telling us that the US economy is looking quite strong. China, not quite as much. But when you look at US crude oil inventories, we saw this week that they declined by 9.6 million barrels last week. And that was surpassing expectations of a 1.8 million draw, and basically led to the price of crude oil rising again. And that comes as Saudi Arabia plans to reduce its output by an additional 1 million barrels per day as of tomorrow, complementing basically the broader OPEC Plus agreement to limit supply until 2024. So all of which does help the price of crude oil to rise. Here, in case of WTI, we're heading back up again towards the April to June downtrend line, which currently can be seen at $71.32. And that would need to be taken out for the orange line here, the 55-day simple moving average, and also last week's high to be retested, and these come in between $72.27 and 70 cents. So that's the short-term upside here, and basically provided all the support area here going back to late May between $67.54 and 12 cents, provided that holds, we expect further upside to take us back up towards the upper end of the sideways trading range in the days and weeks ahead. Gold, let's have a quick look at gold, and we can see here that the price of gold continues to slide and dipped down to a low last traded back in mid-March of this year at $1,894 per troy ounce. And there doesn't seem to be any reason why this downtrend is likely to change in the short term. We are going to have another negative week with regards to gold. And as you can see here, we have actually drifted lower from our multi-year high back in May, in early May, $2,082 per troy ounce, down to this week's low by about 9%. So the gold price continues to slide. And right now, provided we stay below this downtrend line going back to the early May highs at around $1,932, further upside is in store with regards to gold. And we could actually be heading down towards the 200-day simple moving average here at $1,860. And ahead of that, we've got this slight price gap here around $1,871 to $70, which goes back to March, which may actually get filled in the days and weeks ahead. And last but not least, corn. I mean, the price of corn has come off very dramatically on weather-related news, basically out of the US. And you can see here that we traded at levels last seen, I believe, over a year ago. Yes, as you can see here, we traded at levels last seen in October of 2021, only this week. And if we were to take out this week's lows, as you can see here, we're already trading below the 200-week simple moving average at $536.18. Then we could be heading down towards the October 2021 low at $511.60. So that is the risk of us falling through $521.40 yesterday's low. And we'll have to see whether today we can stabilize above that low. But even if we do, given the strength of that decline we've seen over the last basically week, it is likely that even if we were to short-term consolidate, further downside is in store rather than the price of corn reversing and heading back up again. Thank you very much for watching Charting Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is AxelR_IG. Have a lovely weekend. Goodbye.